In this video, we will analyze Pendle. We'll cover how Pendle makes yield tradable and its newly launched product called Boros, which lets you bet on and hedge against funding rates on perpetual futures exchanges. As always, we will talk about the market opportunity, the valuation of Pendle's native token, and protocol risks. At the end, we will conclude with the most important factors to monitor Pendle's success. Not financial advice, let's get right to the video. So why are we talking about Pendle in the first place? Pendle had its TVL peak at 13.4 billion in 2025. Its trading volume was accumulated all over 2025, 47.8 billion, so big numbers here. And the fixed yield settle was $58 billion. If you would have bought Pendle in the 2022 bear market and held all the way through 2023, 2024 and sold in 2025 at its all-time high, you would have made at least 100x. So the only natural question is, since we are in the bear market right now, is Pendle right now a good buy for the next bull market? So how does Pendle work actually? If you are a DeFi user and you want to put 10,000 USDC to work, right now there are only options available in DeFi that give you a variable yield. I took this example here from Maple Finance. Maple Finance earns you between 1 and 10% API a year. If you were to put your 10,000 US dollars to work and would withdraw them in 2027, you would receive back something between $10,100 and $11,000. If you want to eliminate that certainty, you could put that Syrup USDC, which is the receipt token you receive if you deposit your USDC into Syrup, into Pendle Finance. And this Syrup USDC will get split into a PT token and a YT token. The PT token represents the principal of the asset, which is the $10,000 you initially put in. The YT token represents the yield you will get over the next year, which could be anywhere between 1 and 10%. If you don't want to speculate on the yield and just say, oh, okay, I want to have my fixed APY right now, you could buy the PT token, get a fixed APY if at 5%, for example, if the market prices it at 5%, and you're profiting from yield security. You know exactly what you're getting. On the contrast, if you buy the YT token, you're betting on a higher API than the market is pricing right now, namely 5%. And in the case the API is higher than 5%, you will benefit from the exposure to higher yield by buying the YT token. Just to make it really illustrative, if you buy the YT token with a yield estimation of 5%, but the yield ends up being 10%, you doubled your money. Whereas if you just would have held Syrup USDC, you would have received $11,000 back. Now with the YT token, you would have received $20,000 back. Why did Pendle became so successful with that model? The proven markets here are airdrop speculation and fixed yield is stablecoin yield. We can see this in this graph right now. The initial use case, especially in 2024 on Pendle, was speculating on the eigenlayer airdrop. So you can see here that most of the Pendle TVL was actually Ethereum, because with Ethereum, you could farm the eigenlayer airdrop. This use case changed in 2025 to mainly fixed yields on stablecoins. You can see here in yellow and gray are the stablecoin positions in Pendle, which were the dominant assets in 2025, whereas Ethereum didn't play such a big role anymore in Pendle TVL. Right now, there are $20 billion worth of yield-bearing stablecoins on chain. Of that $20 billion, $3.1 billion are sitting in Pendle, which gives Pendle a market share of 15.5%. Now, Pendle has launched in 2025 another product, which is Boros, which is essentially the same product, but instead of speculating on the yield, you are speculating on futures funding rates. If you go long funding rates, you pay fixed implied APR of funding rates that the market prices, just as the market prices the yield on the YT token. and you receive the underlying actual funding rate that is paid out. If the underlying payout is more than the fixed that you are paying here, then of course you will be in profit. If the underlying yield pays you less than the fixed that you are paying, you're in a loss. The same goes for the short rate, in which you pay the underlying and receive a fixed yield rate. So you're essentially doing exactly the opposite of going long funding rates. If the fixed rates are above the underlying, then of course you are in profit because you pay the underlying and you receive a higher fixed rate, which gives you a higher payback. If the fixed rates are below the underlying, you're at a loss. This could be really interesting for protocols like Ethena or generally hedge funds who are taking part in the basis trade. More on that later in the presentation. Let's talk first about the market opportunity of Pendle. The total addressable market of interest rates derivative, which is roughly the same concepts of PT and YT token, are over $500 trillion in the traditional finance world. The stablecoin market is projected to grow to $1 to $2 trillion until 2030. Remember, why is the stablecoin market important here? Because the main use case today in Pendle are yield-bearing stablecoins. If the stablecoin market were to grow to $1 to $2 trillion, more than likely there would be a yield-bearing part of over $100 billion in stablecoins on chain. Spartan Group actually did a good analysis in their article about the serviceable market of Pendle on yield-bearing stablecoins. I'll link you their report in the description below. Their assumption was a little bit more conservative than the $1 to $2 trillion market of stablecoins that are coming in chain. They assumed a stablecoin market of $500 billion, of which yield-bearing penetration would have 15%. If Pendle were to capture a platform share of 25% of these 15%, they would have a stablecoin TVL of 20 billion approximately. The total addressable market for Boros are open interest on perpetual futures exchanges. In the whole crypto space, futures have an open interest of roughly 100 billion. But it is realistic to assume that within the next 2 to 3 years, this open interest could grow to 300 billion or even a little bit more. Let's assume that the basis trade, these hedge funds like Ethena, etc., will make up 30% of these 300 billion in open interest, and the Boros platform will have a market share of 80%. That would put the open interest on Boros at 80 billion. Before we are going to talk about how these serviceable addressable markets would translate into revenue numbers, let's quickly talk about tokenomics here. The price of Pendle is roughly $1.14 at the moment. The circulating supply is 163 million, which gives it a market cap of around 188 million. There are no vesting tokens in Pendle anymore, meaning there are no more early insiders that receive the token on a lower cost basis. The token is completely free floating and only has a 2% terminal inflation rate from April 2021 onwards. So we can largely neglect the token inflation here. It is also noteworthy to mention that Pendle, the token, had a utility overhaul. Before, they had a vote escrowed Pendle model, and they transitioned now to a simplified staking model. In the vote escrow model, token holders could lock up their Pendle token from 1 week up to 2 years, and the position was non-transferable. With that locked token position, users had in addition the task to speculate on which pools will give the protocol the most revenue in the next week, which was not that easy to do. And therefore, users weren't really willing to lock up the token for such a long time and such a high effort in order to receive yield on their Pendle tokens. In the new system, the users just have to stake their token into the protocol. The protocol will buy back weekly the token with its reoccurring revenue and will redistribute these tokens to its stakers. If a user wants to unstake their position, he has to wait 14 days, or they could also unstake immediately for a 5% fine, which makes it really much more easy. Just stake, receive yield, unstake, and wait 14 days to receive back your token. Much simpler than the older model. When we talk about the valuation of Pendle, we can see that TVL and revenue collapsed over the last months in concordance with the bear market, so no anti-cyclical trade here. The current estimated annualized revenue for Pendle is 13.77 million, which gives it roughly a price to revenue multiple of 13.65%. Remember, the market cap was 188 million. Noteworthy to mention here is that the yield-bearing stablecoin share dropped from 30% in May 2025 to 15.5% today. So Pendle not only lost revenue because of less interest in crypto in general, but also because they lost market share on yield-bearing stablecoins. If we look at Boros, revenues are actually growing, but on a much smaller scale. The estimated yearly revenue for Boros is 1.3 million. If we were to add the 1.3 million to the 13.77 million of estimated yearly revenue for Pendle, we would get a price to revenue combined of 12.48 for Pendle. Noteworthy to mention here is that open interest was actually fairly high at the end of last year and beginning of this year, but the monetization rate of this open interest was only roughly 0.1 to 0.2%, meaning if the protocol had an open interest of 250 million, they only did roughly $25,000 in revenue in that week, which is not really high. Also noteworthy to mention is that the team has not yet committed the Boros revenue to token holders. One of the main risks of Pendle is that they don't really have a diversified stream of income and are really dependent on different trends that are going on in crypto. In 2024, it was the airdrop speculation. In 2025, it was yield on stablecoins. This trend will likely persist, but Pendle has a high Ethena concentration. If Ethena users were to migrate to another platform, that would damage heavily the revenue stream of Pendle. Then Boros is still at its infancy. It is only 7 months old. It seems to be very promising, but only has a monetization rate of 0.1 to 0.2%, which doesn't make it a major revenue driver yet for Pendle. Then we have competition risk. Aave and Morpho could also introduce fixed yield markets, which might be targeting a different audience, but at the very least could prevent Pendle from expanding to other markets. Of course, as with every DeFi protocol, we have to mention smart contract risks. And I already mentioned this before. The market share of yield-bearing stablecoins in Pendle declined from 30% to 15.5%. If Pendle were to lose more market share, that would hinder the growth a lot. Now, let's lay out the bull case here. We already mentioned this in the serviceable market section, where we assumed that stablecoin growth grows to over 500 billion on chain. 15% of these 500 billion will be deposited into protocols and will earn some kind of returns. And 25% of these 15% will be put into Pendle to either lock in the yield or to speculate on the yield, which would give Pendle a $20 billion TVL. If we assume a monetization rate of Pendle of 1%, that would give Pendle $200 million of revenue, would translate into a price to revenue ratio of 0.94x at the moment. So a very low valuation. Additional catalysts could be that Boros scales to $80 billion in open interest, and that Boros also adds equity perpetual futures to its product line and even grows to a higher open interest on its platform, which would make Boros, even at the current low monetization rate of 0.1 to 0.2%, a significant revenue driver with 41.6 million to 80 million in additional revenue to the $200 million revenue in the bull case of Pendle. For the bear case, we can conclude that the airdrop speculation on Pendle already faded, and if Pendle were to lose additional market share in the bear market, its TVL could fall below 2 billion, and the general interest in trading on Pendle would decrease with that as well. And Boros could fail as a major revenue driver, even if they would add a couple of $1 billion to their open interest. but stay at this low monetization rate, they're not really competitive, which leads to stagnating revenues, and therefore the market will never price in significant growth for Pendle. So let's bring this all together. The Pendle team has a proven track record of finding trends in crypto early. If they can stay ahead of trends in crypto in general, they will be able to increase the revenue of Pendle again. The Pendle token has no investor unlock pressure, and sPENDLE, the staked version, simplifies the value accrual and makes it really a straightforward token to buy. It is really important to keep an eye on the Pendle market share for yield-bearing stablecoins. As I mentioned before, it declined from 30% to 15.5%. We'll also have to observe what the Boros revenue will do over the next couple of months if the product finds traction and if the Boros platform is able to monetize better on its open interest. But Pendle would also benefit exponentially from a sustainable income stream that is not dependent on trends. And Pendle has to regrow its stablecoin yield-bearing market share. And that's it with the video, guys. What is your opinion on Pendle? Are you more bullish or bearish on the project? Drop your opinion in the comments below. If you liked the video, please give it a like and subscribe to this channel. And check out my Substack, which I linked in the description below, to check out my latest crypto analysis articles. See you in the next video. Bye bye.